How is everyone doing today? It's Peter Harris for today's episode 139, Dry Powder on Display. And I'll be doing this episode solo, like the Frank Ocean song. So we've had a couple job changes here. Ryan E. Daly made the transition from Kaufman Group to Open Arc Corporate Advisory, LLC, on September 29th, 2025, stepping into the role of Senior Vice President, Relationship Manager, based in Atlanta. And just talk about an area that's just growing with, I feel like Georgia's regulatory and tax policies being very favorable and being really just candidly a corporate relocation magnet. So he's based in Atlanta. He now serves as a generalist at the firm, bringing his expertise in client service to the forefront. Prior to this move, Ryan worked at Kaufman Group as Assistant Vice President Wealth Planner. He holds an undergraduate degree from Auburn University, which is a terrific school. Erica, and I'm sorry if I'm botching her last name, Bjork, transitioned to High Net Worth Group as Managing Director and Wealth Management Advisor after more than 25 years at Merrill. And yes, I'm younger than 25 years old. He oversees over $100 billion in assets and liabilities for public companies and their stakeholders. A certified financial planner and certified investment management analyst, Eric earned his undergraduate degree from Cornell University. I don't think I've heard of that school before. Daniel Joseph Welsh transitioned from UBS to RBC Wealth Management, continuing his role as a financial advisor. Based in Detroit, he is committed to delivering quality financial advice and has built a career dedicated to client service in the financial advisory sector. Singapore-based wealth advisory Avrio Wealth registered as an independent RIA in New York City. Avrio, which offers fee-based wealth planning and investment management for U.S. taxpayers, global families, and expats, was founded by Anna Marie Regal, who serves as the CEO. Singapore is also, just to talk about a country that I've always wanted to visit. My cousin lived there, loved it, so it seems like a great area. And and obviously that's a really interesting kind of business model, like really investment management for U.S. taxpayers, especially from like a fiscal responsibility perspective. I think that's rather fascinating. Financial advisors Ryan Gorski and Benjamin McCollum registered Pacific Point Wealth Management as an independent RIA in Oceanside, California. The duo has previously been affiliated with X Advisors and Independent Financial Group. The firm has engaged Charles Schwab as a custodian. A consortium led by Saudi Arabia's Public Investment Fund, PIF, along with Silver Lake and Affinity Partners, has agreed to acquire a major gaming company, Electronic Arts, in an all-cash transaction valuing the company at approximately $55 billion. EA stockholders will receive $210 per share in cash, a 25% premium to the company's unaffected share price, while PIF will roll over its existing stake 9.9%. The take-private deal, expected to close in the first quarter of the fiscal year of 2027, so some time obviously, is pending regulatory and stockholder approvals, will be funded by about $36 billion in equity from the consortium and $20 billion in committed debt financing from JP Morgan, with Andrew Wilson remaining as CEO. And I think this is really interesting, and I know we don't really talk about like take privates as much, but it's a really interesting scenario. I think the appeal from the company being taken private is, you're no longer being inundated or overburdened by any regulatory or compliance costs. And I think for the buyer, clearly, a company like Electronic Arts clearly still has a lot of ability, and it's really being able to realize that, but not in a public capacity. So, and then also just they bought the stock at a premium. So a lot of the shareholders were obviously very happy with that. So I think the take private is a very interesting deal. And obviously with respect to the pending regulatory and stockholder approvals, maybe the FTC will get involved, and other regulatory agencies for that matter. I know that's a big deal, mergers and acquisitions, and also just really anything in the M&A IPO world. And now we are going to be taking it to searches and investments. So to kick it off, for investments, we will be talking about the Wayne County Employees Retirement System, which unanimously approved a $10 million investment in ABS Global Pre-IPO LP, a late-stage venture capital fund managed by ABS Global Investments, based on a recommendation from Titan Wealth Advisors. Now, the City of Hartford Municipal Employees Retirement Fund made a $72 million commitment comprising $50 million to Acadian Emerging Markets Equity and $11 million each to buyout funds, Advanced Investment Partners number 2, and Stellix Fund 3. For fiscal year 2026, consultant NPC is also proposing a $10 million pacing plan for private credit to maintain the pension 6% target allocation and $30 million for private equity to maintain an 11% target. And I think this just really underscores how there's just still so much appetite for alternative private assets, and private equity and private credit are really a major beneficiary of this development and this continued trend. Now we'll be talking about the Employees Retirement System of Texas. The investment staff of the Employees Retirement System of Texas proposed a private markets capital plan for fiscal year 2026, targeting $1.95 billion in commitments within a range of $1.53 billion to $2.33 billion. I mean, that is just obviously a lot of capital. The plan outlines allocations of $800 million to private equity, $450 million to real estate, $300 million to infrastructure, and $400 million for private credit, emphasizing diversified strategies across geographies. The pacing aims to bolster growth, diversification, and liquidity needs as ERS manages $5.7 billion in uncalled commitments and works towards long-term target allocations. And I think, obviously the allocations really just show, not only is the hunger for private equity and private credit really robust, but I think the hunger for, obviously real estate too, but infrastructure, because I think a lot of, in the U.S. and just around the world, there's been a huge push for injecting more private capital into critical infrastructure to revitalize it, bolster it. So I think the hunger there is really high. So now we are going to be talking about searches. So the Quincy Retirement System, based in Boston, concluded its PE search with a selection of 3 managers, allocating $12 million to the Ridgemont Equity Partners Fund 5, $7 million to Reverence Capital Partners, and $6 million to Capital Dynamics Mid-Market Direct Fund 6. The commitments made in consultation with Makita are part of the pension's 2025 pacing to maintain its 14% private equity target allocation. K1 and Charles Bank were also considered for this position. Now we're going to be talking about the San Diego City Employees Retirement System, which just approved a 1-year extension of Aon's contract as general investment consultant, moving the term through May 31st, 2027. So obviously that's, a year and a half from now, so a little over 18 months. The extension allows staff to implement asset allocation and structure review changes while preparing a competitive bid process for a successor consultant, with an RFP expected to launch in August 2026, so a little less than a year from now, and finalist presentation scheduled for March of 2027. Okay, so we've gone to the what does this all mean? So there's a lot to unpack here, a lot to digest, a lot to internalize. So here are Dakota's strategic takeaways for GPs and LPs. LPs remain active and disciplined in pacing despite market uncertainty. Public pension systems like Wayne County, Hartford, Texas ERS, and Quincy are still committing significant capital across private equity, venture, and private credit. So obviously the push for private equity, venture, and private credit are incredibly high. The pacing plans reflect a consistent effort to stay on target allocations while also diversifying across asset classes and geographies. For GPs, this highlights the importance of staying close to consultants. Titan, NEPC, Makita, Aon, Callan, RVK, Auburn, who continue to drive recommendations and allocation pacing. And obviously that's a really interesting niche to be in, because when you are driving allocations and recommendations, there's certain mandates that pension plans have to really try to satisfy, like we're allocating this much to private equity, we're allocating this much to private credit, and obviously a lot easier said than done, especially in our our ever-changing capital financial markets. M&A and new RIAs signal structural change in wealth management. The registration of Avrio Wealth in New York and Pacific Point in California, plus a mega deal like the EA's $55 billion acquisition, highlight the dual track story. Boutique RIAs are carving out niches in global families, expats, and tech-driven wealth, while sovereign private equity-backed buyers remain aggressive in large-scale consolidation. Both ends of the spectrum create opportunities for intermediaries to expand coverage and tailor their products. Number 3, fundraising momentum shows bifurcation by strategy and geography. So I know we've talked a lot about geography today. So Montero's oversubscribed $2 billion raise in Europe, BECO's multi-fund success in the Middle East, which, by the way, the Middle East is just seeing a lot of traction, a lot of hunger, especially like the UAE and Dubai, and Medicxi's ongoing life sciences raise illustrate continued LP appetite for sector specialists and regionally advantaged platforms. Even in a cautious environment, capital is flowing to managers with clear differentiation, whether it's software, healthcare innovation, or regional growth stories. For GPs, clarity of focus remains critical. For LPs, these deals reflect ongoing confidence in specialist managers. Bottom line, institutional investors are staying committed to private markets with thoughtful pacing. Consultants are central to allocation decisions, and fundraising is robust for differentiated managers globally. For GPs, that means sharpening positioning and consultant relationships. For LPs, it means staying nimble, agile, and ensuring pacing aligns with liquidity and long-term allocation goals. For fundraising updates, business-to-business software investor Monterro more than doubled its AUM to $3.1 billion, and in U.S. conversion, $3.64 billion, after it raised $1.73 billion to $2.03 billion in total across its N5 and G2 funds. This Nordic firm said both funds closed oversubscribed, with support from existing and new investors, so clearly a hit, including 26 new backers from Europe, the Asia Pacific region, the US, and South America. So clearly just universally popular among all geographies. REIT partners and Andolph Advocate advised Monterro on the fundraise. So clearly, there was a lot of consulting there. Dubai-based venture capital firm BECO Capital raised $120 million at closing of BECO Fund 4 and $250 million for its growth fund, supporting its strategy of supporting pre-seed and IPO companies across the United Arab Emirates and Saudi Arabia. Fund 4 deploys capital to technology-powered category-defining companies in the construction, financial, property, consumer, and application software sectors, while the growth fund invests $20 million on average in companies within the firm's portfolio in new opportunities. European life sciences investment firm Medicxi has so far raised $290 million from 15 investors for Medicxi Fund 5, according to a filing with the SEC, with its first sale on September 12th. The fund will follow Medicxi Fund 4, which collected $400 million in 2023 to support drug hunters seeking to deliver transformative therapies for patients. Dakota data shows Fund 5 received a $58 million commitment from the Massachusetts Pension Reserve's Investment Management Board. We're not done yet. We have some exciting cocktails coming up. So we have Denver, October 7th, 2025. We have San Francisco, October 14th, 2025. We have Toronto, October 28th, 2025. And then a few more that we have. New York City, also October 28th, 2025. And then Chicago, November 5th, 2025. And last but not least, we have the Philadelphia one, November 20th, 2025. So we look forward to having you guys come out. And again, if you have any questions, please reach out to me and have a great day.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.